All right, guys, what's going on? First pre-recorded video in quite some time. I'm going to try to keep this short and sweet and to the point. Before we get into it, please hit the like button and subscribe. I would appreciate that. I'm going to be putting a lot more love into this content. And if you're interested in any of the platforms I use or the services that I share, check the description below because chances are there is a link with a corresponding bonus. Okay, so as I said, we're going to go into the DOM, or the depth of market. This is something that if you guys watch my live streams, you see me use all the time. It's something I've been using for over a decade now. And if you're a legacy trader, you're very familiar with this. You've seen Trading Technologies DOM, so TT, CQG, Sierra Chart, Quantower has one that serves both markets. But this is, I'd say it's old school, but it's very useful. It's classic. It doesn't need to change. It gives you the rawest look at the market. So you've seen a depth of market before, where it's just the limit order book, resting bids and then resting offers. So you've seen this before on exchanges. You've seen, if you go onto the exchange, you could switch between the, page that shows you the chart or the screen that shows you the chart, and then the limit order book, which might be stacked differently, but you know what it is, right? It's sort of like that illusion image of, are these two faces or two vases? Like if it's cumulative, it has sort of that look, but it's resting liquidity. Now, I'm not going to get too into it, but that's constantly changing. Not all of that has intention of getting filled. A lot of that will get removed as you approach it. So I don't want to say take it with a grain of salt, but you can't just look at a massively stacked bid, cumulatively stacked ton of resting bids or resting offers and gain, really actionable insight from just that alone. Technically speaking, if you were looking at a depth of market, and I've said this before, and you had one side more dominant than the other, and you just threw orders at the book randomly, or stochastically, the side that was more dominant would take longer to deplete, and the market would move in the direction of the side that was less dominant. So, if one side of the book is thinner and the other side remains thicker, well, chances are that's going to indicate either support or resistance. And again, kind of take it on the chin. You're going to look for signs of absorption, and in best case scenario, you'd be able to just see that occur and again, make trades off of that alone. But it's not that simple. So you can't just look at a really stacked bid or stacked offer and suddenly become an incredible trader. There's not a whole lot of DOM use in crypto, and this is for a reason. If you're looking at these DOMs right here, you're trading the ES or the NQ through the CME. That's it. What you see is what you get, right? That's where all the flow is, okay? For the E-mini, there's not 10 different exchanges where you're trading the E-mini, unless you're using some garbage CFD platform, but that's not legit, okay? Whereas with crypto, flow is a lot more fragmented. Now, we know what exchanges dominate flow. We know what exchanges are most responsible for price discovery. We know how to focus on that. Ideally, pay attention to where most of the volume in the open interest is, as long as it's legit. But it's very fragmented, right? There might be just one Bitcoin, but if there are 5 exchanges with spot markets, 5 spot markets, 5 futures markets, these are basically all different products. They're going to be attempted to be kept in line, but they're going to be all trading somewhat differently. And this has provided a decent amount of alpha in crypto for a while. The fact that there are differences and these anomalies or idiosyncrasies between exchanges, and you could glean a good amount of insight from focusing on certain exchanges over others, but it's more to focus on, right? So if you're looking at a footprint, it's like, okay, so first you have to know what venue to aim this at. Now you could have a bunch of, not a footprint. I mean, it is a footprint also, but if you're using DOMs, sure, you could look at all the exchanges next to each other using something like an Okotoki, but you probably want to focus on where most of the activity is. But again, I'm going to try to keep this video as simple as possible. We'll go into more specifics in future videos, such as, looking at spot market versus futures market, spreads, etc. So who uses DOMs or price ladders that you can trade off of? Well, most of the time, it's your higher time preference traders. Higher time preference doesn't mean high time frame. So real quick, high time preference is more lower time frame, higher frequency trading, okay? You have a higher preference for how fast the market does, X, Y, Z, okay? You're more focused on the market. It's not something where, a lot of times you won't find many position traders looking at a DOM. Sure, over time, if I'm looking at a DOM every single day over the course of a long period of time, I could pick up on things that would better serve swing trades and longer term views, but that's not who you're going to see most of the time pointing this tool at the market. You're going to see scalpers, spread traders, higher frequency traders in general. These things are dominated by high frequency traders a lot of times. Your Virtue, Citadel, Virtue used to be Knight. market makers, a lot of that HFT activity, a lot of algorithmic activity is going to be responsible for all the activity you see in the DOM. Not all of it, but a large amount of it. So it's difficult to tell what to pay attention to and what not to. Now, DOMs can be very useful for scalpers, right? Getting in and out for a couple ticks. Very useful for spread traders, looking at different futures contracts across the curve, buying one, selling the other, spread trading, paying attention to markets that have a very clear relationship, and then you could get an idea of how they're trading next to each other. So I'll just say very quickly that there's many times when I trade the NQ by seeing something on the ES DOM. Okay. So I'll see something on the ES because it's moving a little slower. It's easier to focus on, and I'll take the trade in the NQ, which is basically higher beta to the ES. Not to say that it has to follow, but there are many cases where I will take trades based on what I see in the ES. If I'm seeing signs of absorption very clearly at a very significant level that I'm already focused on for the ES, because I'm always keeping an eye on ES levels, even if I'm trading NQ, I'll gun that through on the NQ DOM. So it is tough to pay attention to the NQ DOM compared to the ES. So I briefly want to go into that before I go into sort of every little thing that you're looking at, and then sort of some of the things we will want to see or pay attention to, some other things we could pick up on as well. If I'm trading the ES, the ES and the NQ have a point value that's the same, or not the value in terms of money, but the actual tick. So 25 cents, one tick, 25 cents, $1.1. Now the NQ moves a lot more. So as you can imagine from that alone, if the ES has an average 30-minute range of 6 points, and the NQ has an average 30-minute range of 30 points, well then, if the aggregation is the same, one is going to appear a lot more noisy than the other. So that's actually the trouble with trading BTC on a DOM if you just use it out of the package. Out of the package, I mean, so this is Jigsaw. I take Jigsaw, download it, search the ES, I'm good to go. I don't have to make any adjustments. I could set this up the way I want to, like I have, but I don't have to make any real tick adjustments. I know some people that make tick adjustments for the NASDAQ. I leave it as is. Again, I see how they're trading next to each other. And very simply, you could see right away when the market is moving, I'm going to be able to tell where most of the activity is coming in. Right? If the ES is starting to get rebid and the NQ isn't catching up yet, or inverse, or many other different things, obviously, you can pick up on if you're looking at markets right next to each other. But we'll go into at the end how to set this up identically. So other than the resting bids or the resting offers, which again they're just advertisements, they don't necessarily have to have intention of getting filled. We have a couple other things that if you've taken the course and gone through the other content, you'll be very familiar with. And basically, all those things that would be on separate screens are combined into one thing when we're using the ladder or the DOM. So on the left, first thing we have is a volume profile. So I have the volume profile set up for the session. So let's say it's during the afternoon and it's New York hours or regular trading hours. I'm seeing that current session. Now by that, I have it set up so that I can see the value area. So value area high, value area low. So value area high now has moved because I have it set up by color. Purple is the value area. Outside of that is sort of this teal. The POC, which is this pink bar, and then VWAP. So right away, I see price right next to this. I get an idea of where we are with respect to the POC, right where we are with respect to VWAP, where we are with respect to value, what direction we're building in. And it's a very useful thing to focus on, especially as it's developed throughout the day. Just not having to look and swivel your head, again, can be very meaningful for a trader who's using, their discretion and point and clicking, right? All that stuff takes up time and energy. So if I see a low volume node, so an area of low volume pocket where nothing's really taking place, and then we start building value up here, I know it's a double distribution. So I can begin to treat that the way I would and trade just based off that profile alone. So I don't have to use a chart. I don't have to use a TPO chart or any of that. I could supplement with it when I have a little bit more time, but I'm not missing anything by just focusing on this. So that's our volume profile. And then next to the bid and the offer, you're going to see these two columns. Now, if we're looking at support or resistance, we'll talk about support in this case. Ideally, what do you want to see if you're looking to buy support? You would want to see that other people want to buy it with you. Okay. So this is a pulling and stacking column. Now, pulling and stacking it's very simple, right? You're seeing additional contracts added or removed. So best case scenario at support is what? A bunch of contracts are being added, right? We're seeing fresh hands come in to take advantage of those prices and to buy, right? They're providing liquidity and sort of stiffening or hardening that area up. Okay, so imagine like best case scenario would be you're looking to buy support. That area is firming up. there's not as much intention to sell anymore at that level as we move towards a low. Maybe this liquidity is being removed at the offer. You could begin to get some very basic signs that you would look for. But again, this is very nuanced. You can take a lot of time to develop your pattern recognition and sort of the little anomalies that take place and things that you'll pick up on when you look at this over time. So pulling and stacking. So the adjustments to the limit bid and the offer. In the center, you have last traded quantities. So this is basically sort of like looking at a tape. You're looking at the orders come through. You're looking at the orders hit the bid. You're looking at the orders hit the ask. Now, the center last traded quantity column is going to change. So depending on what platform you're using, it might continuously accumulate until you trade back through the level, and then it'll zero out. Or it might zero out based on a time setting, milliseconds passed, et cetera, et cetera. A Jigsaw has momentum tails, which colors it darker based on how much momentum is on that side. But very quickly, I could see, if there is 100 in the bid, does that person, are they spoofing? Do they have intention of getting filled? Well, I'll know right away if that bid remains firm and we're seeing that level get traded into and this activity increase, right? So we'll see, best case for absorption, what would it be? You'd see a bunch of firm bids and then the top best bid taking it on the chin and all that volume coming in, accumulating there, and then price ticking higher, sort of like what you would want to see in a footprint chart. If you miss any of that, we have the footprint to the right. So this is your bid ask column. That's all it is. It's a footprint chart, right? So for anyone who's looked at a footprint chart, that's all we're looking at. Now, this is going to accumulate over a session. So whereas with a footprint chart that might be set to certain periodicity, this will accumulate all day unless you zero it out. So what I do is as price is approaching a level that I'm interested in focusing at, I will clear this. So I will get a fresh idea of how much buying and selling is coming at the level, whether or not those buyers or sellers actually have intention of doing business. So if I see that, there's large orders in the bid and then small amount of volume comes in and they're gone and we trade, let's say there's 500 contracts down to 58 and then 5 lots trade and we're moving lower. Well, they have no intention of getting filled, right? That's a bad sign. Ideally, we would want to see those quotes constantly replenished and additional quotes added to that and seeing that volume transact. And then again, you would see sort of an imbalance ideally on the profile that begins to develop here at the level. Okay, so keeping this basic, if you've taken the footprint course, the market profile course, you should be able to piece together some of the things that we would want to look for. So that's what we have set up within these columns. Volume profile, right? So I get an idea of clearly where most of the activity is being done. I could see anomalies, high volume levels, really low volume levels, single prints even, right? Pulling and stacking. So adjustments made. If we're looking at demand, what do we want to see? Additional contracts added. As we approach a demand level, support level, we would want to see the offer begin to deplete. So you could imagine how you might begin to parse that together by looking at those two things. Last traded quantities to see whether or not those bids or offers actually are getting tagged. And then just think of it as your footprint chart, right? So those are the columns that we're looking at. Now, I'm talking about doing business, advertising, right? Doing business versus advertising. And the reason is because a lot of times you do have spoofing behavior. So you'll have massive bids, offers that have no intention of getting filled. And you could see because they'll get yanked or a small amount of volume will come through and it will not correspond to the previous offer or bid that was there. That bid or offer will become previous because it'll be yanked. Versus willingness, which is seeing, a very specific bid or the bid side or offer side actually begin to stand in the way of getting taken. So 39 right here in the bid, let's say we were leaning on that as being support. Well, if they have intention of getting filled, I want to see that we're trading 39 there or over 39, or as we're doing volume here and it's accumulating beyond that, this is continuously refreshing. So it's actually getting tagged, right? So now we just saw one traded, nothing, right? Whereas there was just one on the offer, 54 contracts traded. You get an idea of where actual activity is coming into the market, right? And again, whether it's staying for the activity, so whether those bids actually have intention of getting filled or not, right? So you'll see whether or not support or resistance is honest at a base level. Okay, again, there's a lot more complexity to this that we won't necessarily go into. Ideally at support, at resistance, you want to see something rebid or reoffered. So if the market breaks through a support level, if we're in the middle of a breakout, you want to see that your boys are behind you. So let's say that we're, value is moving higher, POC is moving higher, right? Good signs for a strong trend. and we're holding that. More specifically in future videos, you could begin to, again, imagine from the footprint chart videos, if we lose the POC, if we lose the volume level, that's not good if we're a buyer. But you would want to see through breakout levels at support that your boys are behind you, right? That's how we'll put it. So through a level, bid firms up, a little bit less activity in the offer of the ask, that being removed, absorption at the level, so activity coming in at the bid, that staying firm, et cetera, et cetera. So all stuff I've gone over in other videos. For the sake of this video, we really just want to talk about how to get this more like this, or as actionable as this. Last thing I get into is you could see icebergs real time with this. I went over this in a live stream. So in the case, let's say where you don't have a very big bid or a very large offer that's advertised. If you see the opposite, which is a ton of volume done at that level. So let's say, hey, 30 bid right here, 30 in best bid, 30 contracts to buy, and then 500 accumulate right here, and then 1,000. Well, what's going on there? You're seeing this replenish, and that's clearly the tip of an iceberg. Right, so you'll be able to see off of a DOM a lot of the more useful order flow information that you would look at on multiple charts using a footprint chart, a volume profile, etc. And again, to touch on the iceberg point, let's say we were moving up because this is a clean area and so is this. Let's say we're moving up and we're running into an iceberg. You'll notice that this volume profile begins to really accumulate, but there's really not a whole lot in the offer that makes sense for that volume that's actually being done. So more importantly for this video, the difference with crypto, like I said, is that it's very noisy, right? It's not that it's noisy, it's volatile. The ATR is massively different from the ES. Again, ES 30-minute ATR right now is, let's say, 50 look back period, 6 points, okay? If we look at the NQ, I think it's 30 points. Okay. If you look at BTC, I think the average 30-minute rotation size, so the ATR for 30-minute period is like 110. From that alone, it should be obvious you can't use the same tick setting to look at BTC as you can with these. Okay. Based on ATR, you're going to want to get a complementary tick value that allows you to see all of the information we were talking about looking at over here, more specifically here, without this getting washed up and down, right, and being spread out all over the place. So I think the best thing you could do for BTC, and this is based on current ATR, is to use something along the lines of a $2 or $5 tick increment. This will give you sort of a less noisy look, but again, you'll be able to tell, all right, we're beginning to develop volume in this one particular pocket. That area for BTC is obviously going to be spread out a lot more than if you're looking at something like the ES. The ES is a lot more volume that's done, right? You could see someone do, 200 million contracts notional in a point, whereas BTC, that's not going to be the case. If you're looking at, let's say, a 50 million contract position accumulate over a particular region, well, in liquidity conditions like we have right now, that might be over a pretty wide range of prices, but you're not going to be able to tell that that's taken place unless you actually change the tick setting, okay? Because otherwise, you're going to have a lot of gaps within your profiles. It's not going to give you anything that really shows you any kind of fatty, meatier areas to act off of. The same with the volume profile. So we're going to talk about Exocharts because I think this is probably the best DOM. And the difference between, my DOMs right here is I could actually trade off of these, right? I could click on any one of these, right? I could just add right into the bid, right into the offer right here. The Exocharts DOM you can't trade off of, but you could still use it to pay attention to order flow, right? To, again, glean sort of the more nuanced insights that I was just talking about again. So they have, I wouldn't say they, but there's a platform called In Silico Terminal, obviously In Silico, part of Exocharts, that you can actually trade off of. Now, I haven't actually seen whether or not they have the same amount of optionality in terms of the columns you're going to get, so we'll just stick with this one for now because I don't feel like logging in during this video. So the first thing you're going to want to do is you're going to want to set your volume profile up. So volume profile, it's going to be in the period profile. Make sure that this is selected. Make sure that you have it set up so that you have the volume profile value area distinguished and the POC. So this is the POC. If we were to scroll all the way up, this is the high of value, so value area high. And we scroll all the way down. So that's VWAP, and this is the value area low. So already right away, we have something that is kind of redundant. We don't need to look at a market profile. We don't need to look at a volume profile for BTC. We have it right here. And we have our price column and then pulling and stacking. Okay. So pulling and stacking for BTC, same idea as with the ES. Okay. If we're looking at a support level, if we're looking at a resistance level, you want to see, again, that you have your reinforcements behind you. This is sort of the easiest way to see those adjustments stand out. Now, I say stand out because there's a lot that's taking place. There's only going to be so many columns for your pulling and stacking. You're going to have a lot of smaller values being done or being transacted or coming in and out, those quote adjustments. But at a significant support level, at a significant resistance level, you're going to really see one side dominant, okay? The center column is the same column as right here. That is this column. That is the last trades, okay? So flash last trade, and this is based on a sell reset time. So like I said, you're not going to want that to just consistently accumulate over the entire session. You're going to want this to kind of zero out. More importantly, as we approach significant levels, so levels that you've determined maybe you want to do business at or start focusing on, what I would do is get into the habit of clearing. So clearing gives us that fresh look at the market at that level, right? So we already know what's taken place back there previously based on the volume profile. That's going to stay the same. But now we know at the level, okay, this is the amount of activity we're seeing at the bid. This is how aggressive buyers are off the level. All right, we have a ton of activity that was done into the bid. Bid is firming up. Now price is trading higher. You get a very clear indication right away of what you would look at on a footprint chart. Other than that, your difference right here, again, like I said, is the tick value. So make sure that you set this. I would say set this 20 and up if you're looking at BTC. It has to be off some measure of volatility. And I think the best setting right now is $2, but this is something that you're going to have to play with and adjust as you move forward. Because there'll be times when, ATR, we've seen ATR really decreased over the last couple of months as volatility dried up. But as it increases, you're going to want to move this tick setting anywhere up from $5, $10, and possibly even more. And again, the point is so that this is not so noisy. It's the same thing that you would do for your footprint chart. If you're on Exocharts and you're looking at a footprint chart, if you had it on one tick setting, it would be way too granular. All right. So again, this is just a very introductory video. Okay. All of my settings are right here. So for the DOM settings, these will be recorded, obviously. So data source, I think one important thing, at least something that I always do, is use synthetic volume. And that's to make sure that it calculates it to notional. And then here are all your settings for all of those columns within. So DOM settings, update interval, period profile settings, bid ask settings, last trade settings, and then pull stack and bid ask profile. So use this, or take my settings. And what I would say is that, and if any of you have trouble with the settings and implementing them, I have this template saved and I could go ahead and drop that on Twitter or in Telegram or direct message me. What I would do is moving forward, and again, I'm going to have more videos on this, have a DOM open. If you're a support and resistance trader, you're trading BTC, and you could use this for alts as well, have a DOM open and observe the behavior of buyers and sellers at those key levels that you mark out that maybe you would have traded off of without using anything else. Maybe you're just a price action trader. I suspect that if most of you are following this YouTube and you've taken the course, you could see the benefit of using all of this in one location. But if you're new to this, I'm sure it's going to seem like a different language, but it's a very simple concept. You're getting the most raw look at the market. Again, the volume that's taken place, the limit order book, so the advertisements, pulling and stacking, right? So additional orders added or orders removed from those levels. So getting an idea of quote changes, and then the actual activity that's accumulated at those levels. So basically a footprint. The benefit of this is, again, mostly for lower time frame traders, higher frequency traders. But if you're a swing trader and you're looking at the DOM over a period of time, you're going to see the same kind of signs you would want to see if you were just trading support and resistance, right? You're going to see that buyers have been aggressive through a level, or that sellers have tried to be aggressive through a level, and that buyers are remaining firm, and that level is absorbing that activity. And over time, that profile is building. It's going to be more applicable to an intraday trader. But again, not to add too much complexity to it, hopefully this has been a good introductory video to what we're looking at. And I'm going to be following up on this video with a bunch of other videos that are shorter into more specific things that you'll be doing with this moving forward. All right, guys, enjoy your evening.